Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news of more Trump flip-flops and haphazard moves that show Trump has no strategy or exit plan from the mess he created in the Middle East. But first, there was a Pulse dairy auction overnight, and prices mostly dipped from last week's full event. Both butter and skim milk powder dipped 0.4%, but the exception was whole milk powder, which rose 0.3%. The recently high New Zealand dollar has made those changes less in local currency, reinforcing the Fonterra payout reduction. Elsewhere, the US released its June CPI result with a somewhat surprising dip in it, falling to 3.5% after May's three-year high of 4.2%. Markets had expected a lesser dip to 3.8%. The biggest retreat was the 9.7% fall in petrol prices, although other monitoring only recorded a 6.8% fall. Inflation was on the mind of Fed speakers overnight, especially Kevin Warsh, who reiterated his commitment to fighting inflation, saying he had no tolerance for persistently elevated inflation. But he had no details or plans on how to tackle this inflation hike. He was presenting the Fed's semi-annual monetary policy report to Congress. The Fed's target for inflation is 2%, and it has been above that now for 63 consecutive months, so the credibility of achieving that target is not high. The ADP weekly private jobs monitoring fell again, now under 20,000, and the first time it has reported a gain that low since mid-March. It has been tracking lower since early May. The lower fuel costs shifted the needle in the NFIB sentiment survey for SMEs in the US, resulting in a less negative June result. But these same respondents cited inflation as their biggest threat, and the highest level of that since October 2024. Yesterday, big US banks reported strong earnings gains, helped by their role in the Big Tech IPOs and other tech fundraising. And Singapore said its economic activity was 5.7% higher in the second quarter of 2026 than the same quarter in 2025. While this is a bit less than the 6.3% in the first quarter, it was above the expected 5.5% outcome. And China said its June exports were up a remarkable 27% from the same month a year ago, driven by US companies stockpiling ahead of the expected inflationary effects of upcoming producer price inflation from the Middle East shocks, and by China's push to export cars, and that was far more than the 18% expected. It also said its imports were 36% higher than a year ago, driven by crude oil imports. That all meant that it had a near-record trade surplus of $126 billion in June, only exceeded by the January 2025 $136 billion in that month. In Australia, the Westpac Melbourne Institute Consumer Sentiment Survey came in less pessimistic in July, mainly because their fuel price pressures eased and their interest rate fears moderated as well. Job loss concerns eased too. But consumers remain gloomy about the economy overall, and that meant they don't think now is a good time to buy a major appliance. And although it recovered somewhat from very low levels, Aussies are still very uncertain about where their housing markets are going. The story was quite similar for business sentiment in July, as reported by the NAB survey. However, this one reported a sharper than expected improvement, even if it is still negative. Price pressures also moderated, with input price growth slowing to its weakest pace since February and retail prices falling for the first time in 7 years. The US Treasury 10-year yield is now just on 4.57%, down 4 basis points from yesterday, and the price of gold has risen to $4,059 an ounce, up $66 from yesterday. Silver is now just under $59 an ounce, up $1.50. And oil prices are also up $1.50 from yesterday at just on $78.50 a barrel in the US, while the international Brent price is now just over $84 a barrel and up $2. Hormuz transits have essentially dried up as the hot conflict explodes again and Iran declaring the strait closed. There have been just 3 crude tankers and 7 cargo ships exiting over the past 24 hours, and all of those tied to Iran, and only 9 entering for new loads, again all Iran linked. No one has been prepared to pay Trump's tolls, so Trump backed down in a weird rambling announcement less than 24 hours after he announced the levies. It is unknown if any are paying Iran's tolls. Plans to build new pipelines to avoid the area are getting momentum now. So Iran is shifting its focus to blockading the Red Sea at Yemen. The Kiwi dollar is now up 50 basis points from yesterday at just on 58.1 US cents. Against the Aussie, we're up 20 basis points at 83.3 Australian cents. Against the euro, we're up 40 basis points at 50.9 euro cents. That all means our trade-weighted index starts today at just on 62, which is up 50 basis points from yesterday at this time. And the Bitcoin price starts today at $66,477 and up 4.1% from yesterday. Volatility over the past 24 hours has been moderate at just under plus or minus 2.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.